We begin with the stock to watch in the after hours, and that would be Amazon. The tech giant falling hard after reporting an earnings miss.
Hey YouTube, Amazon just reported earnings and it fell nearly 7% in after hours trading. I want to take a look at Amazon's earnings in detail. Amazon is a top position for me, so it's an important holding for Project 1 million. Amazon went on quite the ride yesterday, but it was a bit anticlimactic. Initially, after the earnings, Amazon fell almost 7%. But by the end of the trading day, Amazon recovered actually and was trading almost where it was the day before. In the end, it only lost about 1% plus. Usually, I do not focus on quarter-to-quarter results, but since Amazon is a very important position in Project 1 million, let's take a deeper look. Let's start with revenue. Revenue jumped 24% to over 70 billion, and this was an acceleration from the 20% in the second quarter. Mind you, this is a mega cap and is growing revenue at a very fast clip. The acceleration in revenue growth was largely due to Amazon investing hundreds of millions in bringing one-day delivery to Prime members. This is an investment mode company, and those are the companies I like because they are fending off their competitors. AWS was also another big star in the quarter as usual. It grew 35% year over year. AWS has increased year over year as follows: 35% in quarter 3, the just ended quarter, 37% in quarter 2, and 42% in quarter 1. So there is some deceleration in AWS, but it is still growing very strongly. And quarter to quarter, there will be some fluctuations, but nothing to get too bothered about. With Amazon, it's mainly about revenue growth. Operating income declined 15%, but I've never been too bothered about their operating income. I did a video about how we should look at Amazon and its price to earnings ratio, and you can look at that video to get a better understanding of how to value Amazon. I'll just like to add here that Amazon's AWS operating income declined slightly because of the contraction in operating margin. This was down to 25.1% from 31.1% in the year ago period, and also edged down from the 25.3% in the second quarter. The CFO said that this increase in cost was largely due to his beefing up his sales and marketing team, and secondarily due to increased spending on infrastructure. These are still very healthy margins, and I'm happy to see Amazon beefing up its sales and marketing team to win more business and to fend off the competition. We just found out that Microsoft won the Jedi Pentagon Cloud contract. So this shows that Amazon really needs to step up its marketing team so that it can win more business. But I'm not too worried because Amazon always had a very huge head start in the cloud computing business, and it is really state of the art. So it will definitely be a very favored software provider for cloud services for many businesses. In fact, I think businesses like Netflix and a lot of other businesses use AWS. So Amazon still needs to stay on top of his game in AWS. Another reason that Amazon fell hard initially was because it guided lower for the fourth quarter in terms of revenue. But Amazon tends to under promise and over deliver. So I'm actually confident that in the holiday season, Amazon will beat expectations again. The important thing is that I like companies that play the long game. Amazon is spending money now, suffering some short-term pain for the long-term gain. So not everyone thinks that Amazon had a bad quarter, and I'm in the camp that thinks that Amazon had a good quarter, especially with the revenue growth. Another important thing about Amazon is that it invests for the long term, like I mentioned, and is moving towards one-day delivery for a lot of the stuff it sells. Eventually, it will move to half-day delivery and even to maybe 1 hour delivery. So you can see how Amazon will progress through the years, and it will spend a lot of money, so the share price can be a little volatile. But if there are big dips, I intend to buy more. The other thing I just want to add is that as Amazon builds up its capacity for one-day delivery, it might become a shipping behemoth. That is going to provide a lot of competition for FedEx and UPS, and perhaps another revenue source for Amazon as it leases out its capability. That is already being done by a company called JD.com in China, which is the #2 e-commerce player in China. So I expect Amazon to follow a similar playbook. I think it's good to also get your information from the horse's mouth. Let's hear a few points that the CFO made in the earnings call as reported by CNBC.
To break down the results. Fast Money friend Gene Munster is getting ready to fire up the old red phone in Minneapolis. We kick things off with more on Amazon's big quarter. Josh Lipton is live for us in San Francisco. Josh.
So, Melissa, besides the bottom and top, obviously investors are going to concentrate on this Q4 guidance. It is light, calling between 80 and 86.5 billion. The street was at 87.4 billion. Obviously, for investors, that's critical, right? Q4, the holiday quarter. I did just have a call with Amazon CFO Brian Olsavsky. He hosted a media call. There are some one-time items he did mention which are going to weigh on the Q4. Just for example, he mentioned a consumption tax kicking in Japan, went from 8 to 10%. That created, he said, some pre-buying, in his words, in September. That will have a net negative impact in Q4. But the central question for investors is going to be the bottom line guidance. Now, that was well below what the street was looking for. On that call, he fielded a lot of questions about that. Is it all one-day shipping? And he made it clear they are in investment mode. They do believe that's where they need to be. There's a lot of cost in the short run. He clearly believes that's where Amazon needs to be. And he says there's already evidence that it's paying off. Very good increase, he said, in purchase behavior from Prime members. They're buying more products more often, but obviously weighing on the bottom line. AWS, I talked about that too with Mr. Olsavsky. Listen, it came in growth rate 35%. That was a sequential tick down, $9 billion. That's lighter than what the street was looking for. The guys at Baird, I know, were looking for around $9.1 billion. I did question him about those, some growth rates. He says, bottom line, they're happy with the progress. It's on a $36 billion run rate, up $9 billion year over year. AWS, he says, leads the industry in features and products. Not worried, he seemed to indicate, about these fluctuations quarter to quarter. Melissa,
so Amazon did drop
Jeff.
initially a little, but it hasn't dropped enough for me to want to pick up more shares for Project 1 million at the current levels. It is already a significant part of Project 1 million at about 20% of the portfolio. So I will keep an eye on it. If it drops to about 1,600 plus, I may decide to add a little bit of Amazon to the portfolio again. So I did not pick up any Amazon shares for Project 1 million, but I did pick up some fractional shares for a new eToro account that I've just set up. I'm going to explain more about the purpose of this eToro account and how you can profit from some of the investments I make through this eToro account, and I will tell you about it in a separate video, so keep an eye out for that. That's all for this video. I hope you enjoyed this analysis, and we'll see you in the next video. Have a great day.